Hey folks, welcome back to this edition of Ben's Bits. Last week we spoke on the topic of two overly used buzzwords that are being thrown around for soundbite purposes, which are asset allocation and diversification. And if you spend much time researching the talking heads and the many pundits that are out there, you're bound to hear those two words. But we don't want to diminish the importance of the two words, but they are used quite a bit. And the point was to highlight how they affect your portfolio. And this week, we want to discuss the importance of preserving your portfolio when you're approaching retirement age and discuss some of the options you have when creeping up on that milestone. The major takeaway this week is going to be very personal, meaning personal to everyone watching, because we have different backgrounds and motivating factors that help our decision-making process. And as we've stated before, you should always be investing for what matters most to you. And one rule of thumb that many experts like financial planners or accountants, financial consultants use is to subtract your age from 100 and determine what percentage of investments should be allocated to stocks or options, as it were. For example, and I certainly don't want to insult your intelligence, but I do want to be very specific. If, for example, you're 45, then you might put together a portfolio that's 55% stock or options and 45% real estate or notes. And now there are a handful of advisors who recommend a portfolio that's always invested 100% in stocks on the theory that that asset class delivers the best return. We, however, are not one of those advisors and believe it to be an ignorant approach to investing. But we also don't get any kickbacks for endorsing a business or a company, nor do we receive any compensation from firms promoting their services over the other. That way, we're not beholden to anyone and can deliver truly neutral information for you to utilize. Now, back to the topic at hand, and before we start down a road that isn't really helpful to anyone, capital preservation should be important to anyone at any age. But the approach will be drastically different based on the risk tolerance or the desired outcome. Again, if you're investing to just preserve your capital, that's a very different outlook for someone who wants to grow their net worth. One of the biggest reasons we use the two-pronged investment vehicles of options and notes is that you can accomplish both at the same time. That way it becomes self-propagating by not only preserving the capital with a tangible asset, but at the same time you're growing your portfolio with strategies that not only accelerate that growth of your portfolio, but they help secure your future by having the tangible assets associated with them. The crazy thing is that it's been time-tested and thoroughly vetted over time, and it's very common in the world of the big hedge funds. And the cool part about it is that we can use those same strategies to help us in our retirement years as well. So that's it for this edition of Ben's Bits. And as always, thanks for watching, and we'll see you next time.